right, all right. All right, I'm inviting you, Sasha. Where are you at? There we go. Approved.
Hey, how's it going?
Hey, he's alive!
I had to rotate my phone. That was weird. When I was on the phone with you, it didn't do that. This time it made me rotate it. That's weird.
Really? Really? How you doing, bro?
Good. How about you?
You at the beach?
No, I didn't want to make you upset.
Yeah, that's very nice of you. You
You're
got
welcome.
good lighting. My lighting, for some reason, is a little off.
The sun shines better on me, baby.
Yeah, you look good, bro. You look good.
Thank you.
Looking trim. All right, so normally I do my show and I do it all taped, so I figured I'd do it live this time. So I'm gonna start it out and then ask you a couple questions. First off, give me a little introduction on yourself, man. Who are you? What do you do?
Oh yeah. My name's Sasha Garniski, and Banco Financial is a mortgage brokerage, and we do everything from conventional to non-conventional type of financing for real estate professionals and buyers.
I like it. I like it. I like it. All right, so today on the show, this is the Rescue Ronnie Show, by the way. We're going to talk to Sasha, and he's going to give us a couple ways on how to get into a house. A lot of us are paying high rents, especially you're out in the San Diego area, correct?
Yep.
In Sacramento, everything's rising. Things are going crazy out here, man. All this Bay Area money coming. So you're from the Bay Area, so you know how the game works a little bit.
Of course.
So tell us about Cal HAFA is one of the programs. There's going to be another program called Home Possible that we'll talk about. So tell us a little bit about Cal HAFA, what it does, and how it can benefit.
Yeah, so basically, Cal HAFA is a government program that's there to help people who have lower FICOs, who don't make too much money, who can utilize assistance from from the state level. So you get three loans. A normal FHA loan is you need to put down 3.5%. So you're going to get
Yeah.
a second loan from the state. It's going to be at 0% financing, amortized over 30 years to help you bring the down payment to the table. And then you're going to get a third loan, which is going to be at a 2% interest rate, amortized also over 30 years. And that loan is basically to cover all the closing costs in a transaction. So you could literally put your EMD, your earnest money deposit, and at close of escrow, get it refunded because your entire transaction was covered by the state.
Yeah. And I actually done one of these. So generally they take a little bit longer, but if you have quick buyers that sign everything and get things back to you, you can close them just in 30 days, just like a normal loan, which is very beneficial.
Yeah, exactly. I mean, the only difference is that every bank has to send a package to Cal HAFA when it's ready to close.
Yeah.
But besides that, it's always going to be a normal FHA loan. But the beauty is you're talking about rent versus owning, and you have a tax benefit when you're owning versus renting. You have no tax benefit. So that's a big play for some of these people. They don't realize they can get into a home with nothing out of pocket. So it's letting them know that this government program is out there.
Yeah, there's a lot that just like so you're talking about. I know you're big and high on Home Possible, so give me the scoop on that one. That one's like that one's the Don Juan.
Yeah, Home Possible is the best
Yeah.
because it's the rate is usually going to be about a quarter below market because it's again government subsidized, and it's 3% down. If you go down to a 640 FICO, up to a conforming limit of 453 100 loan amount, and you get an
Yeah.
appraisal credit by Freddie Mac of up to $550 at close of escrow, and you can potentially get it with no mortgage insurance if you have very strong credit. The mortgage insurance buyout, which is called LPMI, lender paid mortgage insurance, can be much cheaper as a buyout. Or worst case scenario, you have mortgage insurance And once you reach 80% loan to value, by a combination of paying down your principal balance and market appreciation, you just call your MI provider and say, hey, I think I have 20% equity. They do an appraisal on the property and they just take it off. So it's an
Right.
amazing product because the rate is aggressive. 3% down with no MI, 30 or fixed conventional. You just can't beat that. Um, and whatever the market's at, you're about a quarter below market in terms of the rate. The only catch to this product is that you can't make too much. So every zip code that you're looking to buy a property into, they're gonna do. You're gonna run that that address on the Home Possible site, and they'll tell you how much the median income is of the most that you can qualify. But there's ways around it. We can exclude bonuses. We can exclude overtime to help someone qualify just off their base pay in case they make too much. But in terms of the best bang for the buck, that's the number one product out there right now that I think anyone that can afford it, it's the best.
Yeah, I know you're talking real highly of it. So what is like, what's the main differences between these? And by the way, if anybody has any questions that's on here, type them in the comments and then we'll answer them at the end. So what do you think? What's the big difference between these?
I mean, the beauty about a Home Possible, I can go in there and I can close in 2 weeks. So your offers are
And
going to
that's
be
big in this market right now because, I mean, that's what people are looking for. High dollar and closing quick because they want their money.
exactly, and it's a conventional loan. So if you've got a little bit of Section 1 issues, that's up to the buyer to stomach those problems, not to have an overlay from a bank to say that you have to have a Section 1 clearance.
Yeah, Section 1's pest stuff and if you have any dry rot, things of that sort. So if you don't know what that is.
Yeah, so in a seller's market versus in uh, hey, thanks, Brad. I appreciate it.
Oh yeah, we do
And
look good, huh?
yeah, baby. But yeah, no. But then with the good thing about Cal HAFA, though, you don't have to go and ask for a seller credit because there is going to be a third loan to cover the closing costs for the buyer. So it's not an impossible deal to do either. You just have to educate a seller saying, hey, you know what? We're probably going to write this as a 45-day contract, but we'll try our best to close in 30. But are we ever going to close a Cal FHA under 27 days? No, it's not going to happen.
Yeah, it's tough. That's tough. The stars would have to align.
Yep.
Right. So
yeah, exactly.
Yeah, so awesome information. I mean, I really, really encourage people to use these programs because they're huge. I mean, and they help you out. And if you're paying rent, you're paying top dollar right now. You're paying top dollar for your home. So this will get you into a house and start getting you some equity and help you retire and things of that sort. So tell me tell me who you work for and how someone can get a hold of you because I know somebody will probably reach out to you at some point.
Yeah, so I work for Bancorp Financial. That's the brokerage
Yeah.
that we work for.
Yeah.
And small boutique residential mortgage brokerage, contracted with over 10 banks. And anyone that wants to get a hold of me can call me at 760-908-0842, 760-908-0842. And it doesn't necessarily have to be your typical conventional FHA deal. If you're a business owner and you've got extremely good credit and cash, but we can help you with that because we have stated loans as well with higher down payments. Um, if you got rental properties that you bought with hard money loans and you'd absolutely make no money, we've got basically commercial lines that we can help you with that are all about the debt service ratio that don't even look at your tax returns or your credit. They don't care. And they're going to be, mid-range single-digit rates versus double-digit hard money when you originally bought it. We got the reverse mortgage stuff. We have loans for flippers. We have hedge funds that back us up to be able to do, flipping transactions where we close in 5 days, so you can offer as good as cash. We have jumbo loans, of course, and just all the array of stuff that a normal bank has, and also the non-conventional stuff as well.
Yeah. So you guys are doing things a little different, which is cool. So yeah, if anybody has any questions, we'll stay on for a few minutes. Jason, thank you. Thank you. So we'll stay on for a few minutes, but so yeah, if somebody wants to go to your website, what's your website?
www.bankor.com. That's bank like Bank of America and ORE like the state of Oregon. So BANKORE.com. Just go and apply for a loan. It's very simple and secured. It drops into a Fannie Mae 3.2 file. My team scrapes it, and we start the process from there.
Yeah, that app you have, that takes about 10 minutes, huh? It's not very long.
No, it's not. And the thing is, I tell people is if you don't know, your debts and liabilities by heart, that's not what matters. The credit report will auto-populate that. What's most important is your job history, your living history, and your personal information. That's the key information in the website that we need in order to pull your application.
Cool. All right, brother. Well, it doesn't look like we're getting any questions. That's all good, man. So I'm going to sign off. As always, have the best day of your life, and adios.
Thank you, guys.
Thanks, brother.
Likewise. Take care.